month over month changes. So as an example, August versus July, July versus June, we are seeing flat or negative numbers across markets. In fact, some very hype markets are seeing some of the biggest cities like Denver and all these other big cities that are very hyped, having 3 or 4% drop in the median prices of homes. Those are big drops. Overall, we saw a 0.3% drop from July to August. So there is a definite slowdown, and interest rates are a major factor. But I have some silver lining. I'm not necessarily convinced that home prices are going to collapse like they did in 06 and 07. Could it still happen? Absolutely. But we have one major tailwind: inflation. This is the positive part about inflation. And I want you to hear that I am sitting here talking about a positive to inflation, which is a very contradictory and contrarian way of looking, not contradictory, but contrarian way of looking at the economy. Inflation helps housing prices, and here's why. How do you build a house? Materials and labor. What's been going up a lot in the last couple of years? Materials and labor. When you have a house, hypothetically, let's say you own a home, and it was built 5 years ago, and it was worth $300,000. Now, that same house costs $600,000 to build, hypothetically. Is your house worth $300,000 anymore? Of course not. Is it worth $600,000? Probably not, because it's 5 years old. Somebody wants to change things. Why pay you $600,000 to get brand new for $600,000? But is it worth over $500,000? Probably. And that's how inflation helps. Look at this. From 1975 to 1984, we saw interest rates go from 9% on homes to 13%. So almost a 50% increase in interest rates. But where do we see housing prices go? The average house, the median house back then, 1975 was $32,000, and it was $81,600 in 1984. Why? We had major inflation back then. That is why they were increasing interest rates. We had big time inflation, but you still saw home prices almost triple. That is what could save housing prices. Does that mean that you should go out there and buy a home? No, pump the brakes. It's still real dollars you have to pay. If you have a $300,000 mortgage, interest rates go from 2.6 to 6%. You're paying 3.5% more. That's almost $1,000 extra per month. That could be a big 10 or 15% of your after-tax pay, extra cost just on that mortgage. But it means that you might be okay just staying in your home and letting equity build up. Inflation is the friend to real estate. Higher costs to build things is the friend to real estate. There are positives to it. Now, if you're one of those people who rent, a housing slowdown could still be an opportunity, because guess what? As inflation increases, so should your income. And then as time goes on, as your income is increasing, you can afford more and more house. That is the point of all of this. It's not some one-dimensional aspect. You have to look at it as a whole economy. Inflation in and of itself is not a good thing or a bad thing. None of these things are good things or bad things. I look at higher interest rates. I've been calling for higher interest rates for the last 8 years, and I'm still baffled why they waited so long. And people are like, that's so negative. You're such a bad person. Okay. I realize that low interest rates just cause asset prices to go up uncontrollably and not rationally. And guess what's happened in real estate and stocks lately? There's been a rational growth in values and in prices, and values have gone up too, but not consistent with the prices. But don't believe that just because interest rates are going up, it absolutely means that housing prices should fall. 06 and 07 was very different than today. Why? We had terrible lending standards. People could just walk into a bank and say, I make this, and they wouldn't verify it. You get 5 or 6 mortgages on the same property. It was a fiasco. It was an absolute bubble. Am I believing that now is a bubble? It has bubble aspects to it, but it doesn't feel like the euphoric bubble of that. I should say that it doesn't feel as euphoric as it was back then. Does that mean we're not going to see housing prices fall? We very well could. If the Fed raises rates like it has been and continues to do so, I imagine we will see a fall nationwide in a lot of prices for homes. But that price drop, I don't think will be the same level of magnitude of 07 and 08, because we had excess inventory. We had lending standards that were insane. We had massive foreclosures. Remember, if you bought a home on a 30-year fixed mortgage, like my fiance did 2 years ago, she has that mortgage locked in for 30 years. As long as she makes that payment, they're not foreclosing on her. That's okay. And a lot of people back in 06 and 07 were doing couple month, 3-month ARMs where they get a 1.7% teaser rate for a few months and then skyrockets to some huge amount, or 1, 3, 5-year ARMs. It's much more likely to get a permanent long-term rate that we get today. So if you bought a home and you're happy with the home, you're probably going to be in it for a while, and that's okay. Let things all go to the wayside because they always do. Bad times don't last forever, and good times don't last forever. 07 and 08 was one of the worst recessions this country saw. And guess what? We came out of it and we became better. COVID crash, the COVID recession, that was terrible. We're much better than we were back then. These things have to cycle through. The Great Depression, the early 80s that we saw this happen. Guys, what happened between 84 and 99? One of the biggest economic expansions this world has ever seen in the United States. But if you go back to the late 70s and early 80s, the gas prices, inflation, sound familiar? Stagflation, all these things were happening. And guess what? We came out stronger because we're still a country of innovation, and some of the best times happen on worst times. That's an absolute fact. So when it comes to your home, don't overreact. If you have a home that you like and you can afford the mortgage, you might just, if you have to upgrade, you might have to sit a little bit longer. But if you can't afford to buy something else, you'll probably get a much better deal than you could a year and a half ago. The stories of long lines and multiple offers aren't happening like they used to. You're hearing about houses stay in inventory a lot longer. These things are happening. I'm quite sure you probably see a lot of your real estate agent friends on Facebook posting a lot less. Oh my God, I sold this house for the couple in 4 minutes at 30% over ask. It's probably happening a lot less now than it was before. So just be calm. Remember that this is the channel you should go to about what's really going on in the economy. Things are very exciting right now. Things are very excited right now. But Russia and Ukraine is starting to heat up to a level that could cause some issues. But remember, you're in this for the long run. You're in this for 20, 30, 40 years from now. You're in this for retirement. Don't let day-to-day reactions in the market scare you into making decisions that will cost you in the long run. Same with housing. Don't overreact. Just be very thankful you have a good house right now that you can afford. And if you're looking for a new house, you might just have to wait a little bit longer, and that's okay. You're still gonna have a good, happy, and healthy life. If you're new to this channel, we've just touched the surface. We have over 1,700 videos. Go watch 4 or 5 more videos. You'll walk away knowing more about money and investing and realizing that we understand what we're talking about. But especially watch this next video on how recessions are an opportunity of a lifetime. Thank you for your time.